Hey everybody, Lawrence here from Financial Thing. Tuesday evening live stream, a little something different as promised this week. We will be back here on Thursday for our usual peer-to-peer lending-based stream, but I've been wanting to do a separate crypto stock trading stream for a while, and just to add a little bit more content, we're going to try to keep it, 30 minutes or so. Give you a lot of good information about what's going on in the stock markets, hopefully. Just let me know if you can hear me okay. I think you should be able to. But we're going to talk about some staking, some crypto staking, how you can actually earn money. Since we can't get any money from the bank interest anymore, we're always looking for ways to get yield. And cryptocurrency offers a way for us to do a thing called staking. I'm going to show you exactly how to do that today live on the stream. I'm going to talk about the trading 212 portfolio and a little trade that I did last Thursday on Zillow, how that ended up working out. For anybody that was here on Thursday, you'll see me foolishly dump 1,500 pounds into Zillow the day before, actually on the day of earnings, because I thought the earnings were going to be good. So I'll let you know how we did with that. We're going to do a little bit of news and what's going on in the markets, the crypto markets, and give you some ideas about how you could invest. And as always, if you can hit the thumbs up. Sorry, I have a little bit of a allergy cough going on at the moment, but I'll try to keep it under control. Hit the thumbs up if you can, subscribe to the channel, and please share this video with people that you think would benefit from this. And if you want to become a Patreon supporter, you can by just scanning that link or going to the link in the description. Thanks to everybody out there who's a Patreon supporter. It was greatly appreciated, and thank you to everybody for tuning in. We'll do a quick hi to everybody. Colin Perry, of course, here in the Peak District. Peter Vince, Leatherhead. It's raining. Aki Chap in Accrington. Robert Pates in Greece. Paul New in Stockport. He wishes it was sunny. Paul Bagworth in Kenilworth. Phil is in the Wirral. The Wirral. I don't know if I won that when I was young. It sounds familiar. And Brian is here from Woburn. So we got a lot of information to get to. Short time to do it in, so let me share my screen. I'm gonna get right into it. Here we go. I hope you can see that. Okay, let me zoom in a little bit again. Where should we start here? Let's start with the trading 212 portfolio. We are up a little bit. This portfolio seems to be just kind of teetering up and down, heavily invested in the commodities and the oils, which I still think is going to be good. We have a Barron's article out here saying how oil could hit $150 a barrel. RBC Capital Markets explained oil prices could jump to record level, which has more to do with the demand than the supply of oil. And their analyst says there's very little pressure on the supply side to restrain prices. This has to do with OPEC, that they have been really unwilling and potentially unable to boost production. So obviously supply and demand and supply weighs heavily on the oil markets, and I just think these oils are going to continue to rage forward. What are we right now? $93.27 for a barrel of oil, Brent crude. I mean, look where this was. This was in the $40 range back in October of 2020, and I still think this has more room to run. Again, not financial advice. Please don't copy me. I am not a professional trader. This is just information. This is me basically gambling and trying to use my best knowledge I can to get returns on this portfolio so we can give more money away to charity. But you can see that the oils have been taken somewhat, I think, well, earlier I looked, some of these oil stocks are in the red. We've got Centrus, which is up 5.75% today. Flex down 7%. So I'm not really sure why Centrus is raging forward. See where LPI is going. A little bit in the red. But I still think there's a lot of room to run on these oils. Look at this. Tullow is back in the 4% negative. Actually, 9% negative total. We were, I think 10% in the green on that stock at one point. So that's taken a 20% swing. Vermilion is still performing well, but we're still holding cash in the portfolio, waiting for a buying opportunity, which I think will definitely come. But I still think oil is going to really move forward. A lot of people have been saying tech now, and if we just take a look at one of our darling tech stocks that we were heavily invested in when we first started this portfolio back in, was it September of 2000? Was it 2020? You can still really see it still struggling. Magnite here at $13. So I'm not convinced that the tech sector is heading for a rebound. See here, Magnite has really fallen heavily. Tesla seems to be doing okay. But I'm still betting heavily on the oil. So we did a Zillow, little very short-term Zillow trade last week, which turned out to be the correct choice. Zillow, when we bought it, I think was in the 49 US dollar range, which was, let's look, a week ago. Yeah, we bought down here about $48, $49, and you can see the next day, this was when the tradings report and the earnings call came out. They had done very well, and the stock continued to go up. We sold out here, I think, about $58, $59. But now, as you can see, and this is a great example of market timing and how it can really hurt you the other way of profit taking. Zillow stock is now up probably another 10% of where I sold it at, now at 64 US dollars. So you can see it was a little bit turbulent, dropped down to 54 on the day after the earnings call, and then up to 60, back down to 58, and then has moved forward since. Do I think this is a good stock long term? Maybe. I don't know. It's a bit of a gamble. It's not something I wanted to hold long term, but you can see here it's down from 200 US. So here is the trade history on the short-term trade that we made. You can see we bought here 49.05 on the partial fill. Hopefully you can see that okay. 49.05, and then we had a small fill here. This is again 49.05, and then we sold out the very next day at actually 56.91. So sold too early, obviously, but taking profit is always a good thing. Again, it could have completely gone the other way. Also in the portfolio, we've added some gold here, which normally I'm not really a gold proponent. I don't believe in it as a long-term investment. But however, what's going on in the Ukraine with this uncertainty, I think that gold might really make a run, especially if Russia does decide to make that move into the Ukraine. Then I think you see gold and oil prices start to really take off again. So a bit of a hedge there. We decided to pick up some Barrick gold. Not really done much. It was, let's see, where were we, a week? Yeah, it's up a little bit for the week, 3.94%, but from where I bought it, 0.77% in the red. So happy about the Zillow trade. We profited, I think, in the 200 pound, can't exactly remember how much it was, 200 and something pounds. Pretty good for one day, but again, could have quite easily gone the other day. Got pretty lucky with that. There is some news coming out here. Valkyrie has released a Bitcoin miners ETF fund. That's an exchange traded fund, which went live today, actually, for the first day. This is funny. WGMI is the ticker symbol, which, if you know anything about the internet world, this actually means we're gonna make it. NGMI means not gonna make it. So this is a term that is really used a lot in the crypto world, and it's really funny that Valkyrie, which is a investment fund, decided to use that ticker. So this is a fund, an ETF fund filled with technology and cryptocurrency mining companies. You can see here, and it utilizes 70% renewable green energy, which is something they're big on. Here's the photo of them going live today. Let's look and see how it's done. Look, up 7.49% for the first day, which is very, very positive. What I liked about this fund, this is a great way to get exposure to cryptocurrency technology, and also mining if you don't want to buy the individual stocks, because you can see here buying the individual stocks can be risky. CleanSpark, I'm down 34%, and then Hut 8 down 7%. Those are two cryptocurrency mining companies. So there is some downside risk, obviously, with buying the crypto mining companies. But you can see here the holdings of this. I don't know if I can zoom in. The holdings of this fund are actually, you've got AMD, the chip maker. You've got Argo, cryptocurrency, Bitfarms, CleanSpark, which I own in the Trading 212, and just a bunch of other 45 total companies that are involved in either mining or the technology side of cryptocurrency. So it's a really good way to get some exposure. I do like this AMD exposure. I think that's really cool. And I think they have NVIDIA in there too. I think NVIDIA, they got Samsung in here. Riot, here's the NVIDIA Corporation. So some pretty strong tech plays inside this fund if you want to get some exposure to cryptocurrency. And also there's other ways to, I get that asked a lot. Well, I don't really want to buy Bitcoin or Ethereum or the crypto coins itself. How can I get some exposure? And here's some of the ways you can do it. You can buy such stocks as Coinbase, which actually holds cryptocurrency on their balance sheet. Also, obviously, Tesla having a big position in Bitcoin, and MicroStrategy to Michael Saylor, who holds billions of dollars of Bitcoin through his company MicroStrategy, which is traded on the US stock market. That's a great way to get exposure. Actually, MicroStrategy, I think, is trading at a really big discount right now. It was up at $964 US, so it's lost 58% in the last year. So you could pick up MicroStrategy on a discount if you want to get some exposure. You can also buy Block, which is Square, the credit card processing company, which holds, I think they got about $50 million of Bitcoin on their balance sheet. And then any of the mining companies, if you decide you want to buy those individually for the higher risk, higher reward stocks. But I think a safe way is probably buying things like these blue chips, Block, Tesla, MicroStrategy, and then maybe the funds. Also, Fidelity has released a ETP, which is an exchange traded fund in Europe. And this is actually a spot Bitcoin fund. So that means Fidelity actually buys the Bitcoin to hold within this fund, which gives you exposure to the Bitcoin. And has an expense ratio of 0.75% a year, which is kind of a downside. But again, if you don't really want to get involved in buying the specific spot Bitcoin yourself, which I think is always a better way to go, you can buy a fund from a big company like Fidelity and get that exposure to the spot actually Bitcoin that they hold as a custodian, which is important. It's not like the Grayscale trust that's sold in America that doesn't actually own the Bitcoin, or some of those other ETFs that are futures. This one actually holds the Bitcoin. Now, I don't know if this is available in the UK. I haven't actually checked, so I just read about this today, but it is FBTC. I think it may be, it's listed on the Dutch Bourse and Frankfurt Stock Exchange, and it's set to be listed on the SIX, the Swiss exchange, in the next few weeks. So good way to get exposure here. Just a little bit about NFTs. I've gotten a few emails this week about NFTs and what do I think about them. Do I think they're good investments? These are non-fungible tokens. You probably heard about some NFTs selling for big bucks. One hot NFT right now is called the Bored Ape Yacht Club. Just gotten a ton of attention. Basically, it's just a picture of an ape. There's 10,000 of these things, and these pieces of art are selling for, this one's going for 60 Ethereum, which is 187,000 US, which is crazy. And when people think about NFTs, this is what they tend to generally think about. But what I think is going to be more important in the future is smart contracts that are really a proof of ownership. And these are used to show proof that this person that pays 187 grand is the actual real owner of this original piece of art. whereas I could just save this image on my computer. So, you know, you wonder what is the real value in this picture. Now, the smart contracts that run these NFTs are where I think the future of this technology is going to be so important in the future, and where you can actually invest in and make a lot of money. You can go to IBM.com right here. They have an article on smart contracts. But very simply, smart contracts are programs stored on the blockchain that run when predetermined conditions are met. These typically are used to automate the execution of an agreement so all participants can be immediately certain of the outcome without any intermediary involvement or time loss. Smart contracts can also automate a workflow, triggering the next action when the conditions are met. Now, that's really super cool if you think about the practical uses of something like that. And we're a long way away from this happening, but take, for example, a property or a real estate transaction that takes so long in most cases to finalize. You got to go through all the paperwork, things that get sent back and forth. You got to go through the legals. Smart contracts could be used to really speed up this process of real estate transactions, where they could literally be done in matters of hours, maybe even minutes, because everything is programmed into the smart contract. There could be other uses, I don't know, like through virtual reality and trading, and there's just so many different uses and things that I haven't even begun to think about. But this is where I think the future of the blockchain is really going. This is why the Ethereum coin is trading for so much right now, because it's used so heavily in these smart contract purchases. You can see Ethereum right now is running at $3,096 a coin. Every time most of these smart contracts are being executed, things are being purchased through the blockchain, the Ethereum network is being used. But smart contracts are going to prove ownership, and that's a big deal, because proof of ownership, you know, if you think about right now, to prove ownership of certain things, you might have to provide a search, or like a legal search to prove ownership, which can take weeks. Smart contracts are going to circumvent that and make that process much faster. So I'm pretty excited about the ability to be able to maybe invest in some of these companies that are providing infrastructure for smart contracts. Also, some of these cryptocurrency coins that are involved in retail finance transactions, like Solana, Ethereum, things like that. There's a lot of coins, Terra, Luna right here. You can invest also in the ecosystems. Also Solana, you know, one of Ethereum's competitors. So there are a lot of opportunities within the crypto space, which goes way beyond what we know crypto to be. Again, I've always said this, we're very early in the space. Right now, think of dial-up internet from 1999, and there's just going to be so many good opportunities in the future. Let's see, what else we got? So we got that Fidelity Fund launching. Let's get rid of Mr. Bored Ape. You have to be a little bit careful too if you are going to buy things like this. There are some scams out there, even on these big trading sites like OpenSea, where people actually will copy these photos and then sell them for very cheap amounts. You always want to make sure they're coming from the actual company and they're verified by OpenSea, because some guy could come in and make an account called the Bored Ape Yacht Club, which you might miss the S, and be selling these pictures for ridiculous amounts of money. Unfortunately, there are scammers out there, so be careful. Yeah, so I want to talk to you a little bit about trading and staking, because this is something I've been really interested in looking at. As somebody that holds cryptocurrency, what I can do is stake this cryptocurrency in some cases where I think it's not too risky and get a return on the investment. So the same way that you would take £100 and put it in the bank and be paid 1% a year, I could take my say Ethereum coins that I own, or my Solana, and stake it and receive an APR every year. And it depends what you're staking. The rewards can vary differently. They can be thousands of percent a year down to 2 or 3% or 1% a year. Just depends on what's out there, the offers. But one thing that I was dabbling about this week is staking of Solana. Solana is a top, what are we now right now with Solana? A top 8 coin. It's the 8th largest cryptocurrency. It's a $32 billion market cap, which is relatively small when you compare it to a Bitcoin, which is 834 billion. So, a lot smaller. There are 319,188,000 Solana coins out there in circulation. This Solana is a very cheap transacting coin. So unlike Ethereum, which costs a lot of money when you do a transaction at the moment because of the network congestion, Solana is a very cheap coin to transact with, and it can be sent very inexpensively. It's about a little bit over $100 a coin. I think I bought it about 70 US dollars, probably about a year ago. And I forget what it went up to. It went pretty high at one point. You can see 258 was its high point back before we had this market correction. So still a good chance to get in on a discount if you want to get into what I consider more of a top, more blue chippy type cryptocurrency that I think has a lot of room to run. So what I did is I opened up a wallet. I was looking into staking, so I thought, what can I do with this coin? Because it's sitting in a wallet. I plan on holding it probably for the next 3, 4, 5 years. What can I do with it? And I discovered that one of the places a lot of people like to stake Solana, which is a very reputable place to stake. It has been audited financially. It's been given the approval by the Solana Foundation, which is a really big thumbs up from Solana itself, saying yes, we think this is a decent place to park your Solana. You can see the APR is not crazy here. You can get 6.24% a year right now. It varies a little bit. It changes. And what Marinade Finance does is you give them your Solana and they spread it to these things called validators, right? Validators are people, they're usually companies or even just private people who run Solana transactions on their network. So in a very simplistic way, say a guy has a couple of computers at his house and he's got power to be able to run Solana transactions through his computer. He then can become a validator. So he has to have a certain amount of coins. I think it's, oh gosh, I don't remember how much it is. Quite a lot, maybe 1,000 or even 10,000 Solana coins. But you have to have a good amount of Solana coins under your ownership to become a validator. But there are lots of these validators out there on the web. Let me show you. See if I can zoom in here. This is the validators. It's not allowing me to zoom for some reason. Sometimes these websites don't. But these are a list of the validators and the API. Oh, there we go. The APRs that they offer people who want to stake their Solana. So right now the top one is 6.8% from Shinobi. And there's a little bit of a delay. You can see here they charge a 2% commission. So what Marinade Finance does, wow, this is just running on a real delay. It's probably going to go back in a minute. What Marinade Finance does is splits your Solana across all of these validators. I think there's 400 and something. So you end up getting an average APR of whatever the average 400 validators provide. So they tend to be around the same. I've seen this APR get up to 7.5%, but some of them charge 0% commission. You can go to stakeview.app if you want to check this out. And these people do not control your cryptocurrency. And you can also stake your coins directly to these validators to get that APR yourself. They don't have any control over your coins. The only thing that they do is offer you, and it's all done through a smart contract. Again, we were talking about how smart contracts work. They have no ownership over your coins. They just give you the APR return. So the worst thing case scenario, if you were to stake directly to these validators, is you wouldn't get any returns. And staking is actually very easy. I'm actually going to show you how to do it. So the first thing you need to do is to buy some Solana, and you can do that. Let me see if I'm logged in here. And I'm going to see if I can make this happen live. Hopefully my internet doesn't crap out. Here's my Coinbase account. This is my Coinbase Pro account, which I've got 50 pounds in. And I'm going to buy some Solana live TV. So for anybody that wants to buy cryptocurrency, do it through Coinbase Pro. The fees are a lot cheaper than Coinbase. You have a Coinbase Pro account. If you have a Coinbase account, it's automatically tied in. So I'm going to go ahead and select the market here of Solana. And I'm going to select Solana to Great British Pounds. That's what I want to buy. And I'm going to buy the max here of 50 quid. My fee here is only 25p. You can see here I'm going to get 0.66 Solana at a price of 75 pounds. Well, let's go ahead and execute that. You can see down here at the bottom, now that buy order has been placed. So if I go to my portfolio, I now have this Solana right here, 49 pounds and 66p. So what we're going to do is move this Solana over to a wallet, which I've created. This wallet is called a Phantom wallet, and it supports Solana. And this is how we're going to stake our Solana. So you would need to go and create a new wallet, which is actually really simple. Takes a couple of minutes. I'm not going to create a wallet, but if you go to Phantom wallet website, make sure you go to the right one. It's phantom.app. Right here you can download the wallet right to your browser. It's very safe and secure, no issues. Haven't heard of any potential problems. You'll need to write down your seed phrase, which is your security keys. Make sure you keep those safe, and then you'll have a password to get into your wallet. So I'm just going to go ahead and log in here, show you what the wallet looks like. It's really easy to use. I'm just going to do this off screen, so I'm not showing everybody my password. So let me share this right here. You can see, hopefully, can you see that? Hope you can see that. Up in the top corner right here is the wallet. So you can see here I've got some Solana. I have about 4 Solana in the wallet. I was waiting to make a video to show how to stake this. And you can see right here I've got 4 active staking accounts, right? So we'll take a look. See here, for instance, is Leapfrog. So right here on second on the list is Leapfrog. They pay 6.71% a year with 0% commission. They've got 310,000 Solana staked. So Leapfrog is one of them. And then I think I have Cogent. Where is Cogent? I have Covalet down here, number 19. And I have Cogent number 22. So I just picked out a few different ones. You know, I have 4, and then Marinade also. So I'm doing it 2 ways. I'm staking directly through these people that offer the APRs through the wallet, and I'm staking through Marinade Finance by holding the Solana and then staking it through them. And I'm going to show you how to do that too. This is the way to direct stake. So what I would do here is my wallet address right here. And I can just copy it to the clipboard, copy, right? And then I go to my Coinbase account and I'm going to make a withdrawal of my Solana. Right here, you can see I have the Solana. And all I'm going to do, and you can do a small amount to test it. You can, whatever the minimum amount is. I don't know what the minimum is in Coinbase, but I would always recommend doing a small amount to test it, but since I've tested it before, I'm just going to put it in and I trust it's going to go. You can see here it says valid sol address. That means your address is correct. Make sure always that you verify that your address is correct, because if you send it to the wrong place, you send it to the wrong wallet, you're not going to get any help getting it back. This is part of the decentralization of cryptocurrency. So always double check, make sure that you're putting in the correct wallet address. The best way to double check here, you can see the first 3 letters are ZQY. You can see here ZQY, and at the end FWF. So you can see I've got the right address. I'm just going to send this max amount 0.661, and let's go ahead and withdraw that. Okay, now I have to get my authentication app out, which is just security. I use the Google Authenticator app, which you should definitely have 2-factor authorization on any of your financial accounts. I'm going to go ahead and put that number in here. Let me just turn that off for a second so the Russian hackers don't get it. Let's see, yeah, let's do that. Withdraw. Hope I put in the right code. Okay, so there you go. That has been withdrawal, and that will be sent to my Phantom wallet. Let's pull the wallet up, and I think it's already come in. Let's see. Yep, there you go. Look at that. That's been received. You can even view that on the blockchain. This is the actual blockchain. We can see that my transaction has gone through straight away. Very, very fast. You can see how much it cost me. 0.00005 sol, which is, I don't know, a penny maybe or something like that. It's very cheap. So this is why everything is recorded on the blockchain, for proof that these transactions have actually gone through and worked. So we have that now in our wallet, and what we're going to do is we're going to do a little bit of staking here. So I like my guy over at Cogent. He's somebody that I actually have been communicating with on Reddit, and he's always been really active in the community, and he's a validator. So we're going to, oh, by the way, if you wanted to stake, see if you can pull up, can you pull up Marinade? If you wanted to stake with somebody else, let's say you go to stake view and you decide you want to do it with this guy, this company at the top, Shinobi, you just go into your Phantom wallet, click on Solana, click on staking, and then you can add right here Shinobi Systems. I don't do it through them because they have this 2% fee. Some of them have up to a 10% fee, so you got to kind of be careful with the commissions, as we know you want to keep your expenses low. So I'm going to just stake a little bit more here with Cogent. Well, let's see if maybe I have to pull them back up again. Add stake Cogent. Let's go ahead. Yeah, so I have to add him as a plus again. So let's stake another half a sol with him. You know what, let's stake another. We're going to stake 1 sol with him. We'll go ahead and hit stake. Boom. And we just hold on for a second. It should go through. Now, one thing you need to know about staking too is, first of all, you can view this transaction again on the blockchain right here by just clicking on that view the transaction link. I don't know if my internet connection is being a little funny or what's going on. Just be patient. Oh, that was not good. Hang on. Maybe it's not gone through yet. The woes of being live. Okay, let's try again. Let's see if that worked. Hold on. No, for some reason it didn't work. All right, let me see what happened. Oops, not him. Cogent. No, I don't know why. Maybe that's still processing or something. I couldn't tell you why that one didn't go through, but maybe I'll try it again. Let's try it one more time. Here we go, 1 sol stake. Sometimes if you have an issue with your internet connection too, it can create some issues. Mine can get a little bit spotty over here. I don't know why. It could also be something to do with the validator. Some of the, sometimes it doesn't always work, but let's see if this one goes through. Do it live. Now, one thing is you don't have to worry about losing your cryptocurrency because, again, these people have, there you go. These people don't hold any of your cryptocurrency. They just get it staked through the blockchain. So you can see that has been staked. If we look at the transaction right here, there is the transaction 1 minute ago, success, and it shows that the fee here of 0.00001 Solana for the transaction, very, very cheap transaction. And here it shows all of your staking on the blockchain. Right down here it shows Cogent, right here at the bottom, Cogent, boom. So I now have this Solana staked with this Cogent. You can see my balance went down because I don't have access to that right now. I can unstake it too at any time if I decide I don't want to stake it anymore. You can see right here it says activating. It takes about 2 days for this to activate. That's the cycle. Solana has a thing called an epoch, which is about a 2-day cycle. And then you can see these are the rewards that I've gotten so far from my staking. And this will go up every couple of days as the APR is added to your account. You get paid in Solana coins, by the way. You don't get paid in pounds or US dollars. You get paid in the coins, which is why I like it. I mean, that's the ultimate compounding interest. You don't want to get paid in pounds. Personally, we don't want to hold we want to hold as few pounds or dollars as we possibly can. So that's the way that you stake. And then, if you decide you don't want to stake it anymore, you just literally hit that unstake button, and then within 2 days, you get your Solana back in your wallet, and then you could stake it somewhere else. So the other way to do it, like I said, is through Marinade, which is a way to distribute your funds, your Solana, to stake it across many of these different validators. So you could imagine it's very much like an index fund of staking. A lot of people really like doing this because they don't want to do it individually through the validators. I don't think it really makes a lot of difference. As I said, the worst thing is a validator wouldn't pay you your interest. That's the only real risk of staking through the validators directly. But you can see here Marinade has 6.68 million Solana staked, so almost $700 million of staked Solana on this platform. So very, very solid place, and they put your Solana through 467 different validators, and it's very, very easy to stake. All you do is you get that, make sure you're logged into your Phantom wallet again, and then you connect your Phantom wallet, boom, and that's it. So you can see my wallet right here. That's ZQYFWF. This is just the identifier number. See right here, there's my wallet number, so you know your wallet is connected right through your browser. And then simply you just, you can see my balance here is 3.67 sol. So all I do is go ahead and put in how much I want to actually stake of my Solana. You want to make sure that Solana is connected. See how I did that? It shows my balance. I'm going to put in, let's see how much we put in one. Let's put in another Solana here. We're going to stake that and we're going to get 6.24%. So here we go. We just hit stake. And then I go into my wallet and approve the transaction. Again, this is all verified on the blockchain. Transaction is sent. And that will, boom, and there you go. There is my staking confirmed. Now, the very interesting thing about Marinade, what they do, there's a second part to this, which can get a little bit more complicated, but I'm going to explain it to you. What they've done is they've given me back this thing called MSOL, which is short for Marinade Sol. So they've taken my Sol, my Solana, they've staked it across these 467 validators, which I get that APR now return. But now in my wallet, I've been given these MSOLs, and I've gotten 0.96822 MSOL back. So I've given them one Solana, they give me slightly less MSOL back. The reason is this MSOL increases in price. It has the APR baked into it. So it's a little bit lower, but as time goes on, the price of my MSOL will eventually reach 1 or 1 for 1. And then as I hold it for longer, I'll have more than one MSOL. So I hope that makes sense. It's a little difficult for some people to understand, me included at the beginning. But basically, your APR is going to be baked into this MSOL. And eventually, over a year, once you got your APR, this will be 1 to 1. But what they do is they give you MSOL back in your wallet. You can unstake this at any time. But right now, you can see here I have 5.39 because I've already staked through Marinade before, so I've got more MSOL in here. But now I have 5.39101 MSOL in my Phantom wallet. What I can do is turn around now and do one of two things. I can restake these MSOLs back into Marinade right here and get an additional 1.69% a year. So this is an extremely safe way of staking your MSOL. So not only will I get the 6.24% here, I'm going to then stake my MSOL and get another 1.69%. So pretty cool. Now, if I wanted to take a little bit more of a riskier attitude, I can actually take those MSOLs and participate in the DeFi section of Marinade Finance, which shows these other companies where you can provide your MSOL as liquidity for kind of like a trading platform. Now, this is definitely going to have more risk involved. But here there's $25.6 million US locked into this platform. This is called Synthetify. I don't know anything about this company. I haven't researched them. But if I wanted to stake my MSOL here, I would get an additional 11.16% a year for doing so. And I would provide liquidity to Synthetify. What that means is people use Synthetify to trade. It's like a DeFi platform. And these DeFi platforms need liquidity because they're not getting liquidity from, say, a corporation. So you could think of it like peer-to-peer. It's really peer-to-peer, people depositing their liquidity or their MSOL or whatever token that Synthetify supports in order for people to be able to trade coins on Synthetify. So if I connect my Phantom wallet here, which you can see up here is very easy, I could then add liquidity for any one of these coin pairs, including USDC stablecoin. You can see MSOL, and then you're going to get different APRs depending on what you decide to provide liquidity for. Some of these pairings here have, you can see here, this is just strictly MSOL. So I would just put my MSOL through Synthetify and get 11.16%. You can also get much higher APR returns. And these vary. You're going to see these things change every day. I've seen these as high as 36% a year. But I could put in MSOL and I could put in USDC stable coins too into my Phantom wallet, which is a coin that doesn't move in price, the USDC coin. And then I could get 11.18%. I would have to put in the same amount of MSOL and the same amount of USDC for both to provide that liquidity. So I'd say I have $100 of MSOL I want to provide liquidity for. I'd have to have $100 of USDC coins inside my Phantom wallet. Again, we're getting a little bit deeper into the rabbit hole. This is generally not something that I would suggest an amateur do, but you can see you can do Bitcoin too, get 18%. I tend to say when you're starting out, the easiest way, I mean, look at this. This is crazy. 95.44%. Again, there is risk involved in this, hence the APYs that you're being paid out. But I think the easiest way, if you want to get into staking, a relatively what I consider to be a safe coin in the cryptocurrency world, I think using Marinade connected to a Phantom wallet is probably your best bet. And then you can take your MSOL that you get when you stake your Solana and then get an extra 1.69% for locking that in. Again, you can withdraw this and unstake it at any time. You can see right here, you just go to unstake, and then I could just unstake however much I want out of my max down to whatever I needed to pull out. It would. You can also pay a fee of 0.3% to unstake it immediately, which goes to the Marinade liquidity pool, or you can wait 2 days, which is what I said about that 2-day epoch it's called, and then you would be charged 0 fee, and that your Solana would come back into your wallet. You'd lose your MSOL and it would be traded back for your Solana. Yeah, I mean, it's very easy to use. It's a little bit complicated with this epoch because this is a 2-day cycle. You can see ETA 2 days, 9 hours, 51 minutes. Maybe it's a 3-day cycle. But yeah, staking through Marinade Finance, I found is probably one of the best ways to take your Solana and get a return out of it if you're planning on sitting on it and holding it for a while. So I hope I didn't overcomplicate that. It's really not a complicated process. It's just a matter of sending Solana to your wallet, connecting your wallet to Marinade through this little button up here. See here, connect wallet, Phantom, and then staking. This will automatically populate how much you have in your Phantom wallet, and then you just decide how much you want to stake. And then in your Phantom wallet, you can see that here, how much I have in Marinade Sol tokens, the MSOLs that they give me when I stake. Right there, I have 5.39. I could do whatever I want with those. So it's kind of like you're getting something back for what you're staking, which is very unusual. Normally when you stake cryptocurrency, you don't get anything in return. Your cryptocurrency is locked into this staking process and you have nothing further to do. But the way they give you these MSOLs back to be able to use to do something else, you can compound that and just get a pretty nice, 7.3, 7.4% APY interest return per year. Or you want to get a little bit more creative with your staking, you can use these decentralized finance platforms and stake your MSOL to them. There's some pretty decent ones on here. Radium, Orca. These are pretty well used platforms. You can see some of the total value locked in amounts: 59.8 million, 53.1 million. Not huge amounts of locked in total value, but decent amount. That means $53 million of Solana have been staked through this platform. So, this is not a fly-by-night thing. Again, they're very, very decentralized. Nobody has control over your coins. And yeah, I would say that just pay attention, do a little bit of research, but I think using Marinade is a great way to get started, or just stake directly through your wallet to those validators, which you can find at StakeView right here, stakeview.app. This constantly changes. This APY, when I looked a couple of days ago, was about 7.8%. So it changes as the transactions that are going through these validators change, but a really great way to get yourself some APY, some yield on cryptocurrency if you're a believer in that. If you're not, you can, I guess you could put your money in the bank and get your 0.5% or 0.7% interest. But I think this is a great way to stake. You can also do things like stable coins, USDC, which are pegged to the price of the pound or the US dollar. They don't fluctuate at all, and you can get some pretty good staking rates on USDC. See here, this is the price of one. It really goes up and down, very close, pegged to the $1 range. But you can get, let me show you that. You can see here, it's all pegged to the price, pretty much trading around 99 cents and $1. It's been that way for a long time. Going back to, let's see. Yeah, the other one you can use is Tether, which is a stable coin. You can stake that. I don't recommend that. Tether to me is not. They're going through some things right now, but you can see it's pretty stable to the price of $1 going back to 2015. So they've been around for a while. Some questions about Tether, though. I prefer to use USDC. But I think I'm getting about 9% staking USDC, which is a coin that will not fluctuate like regular cryptocurrency does. So in my opinion, as good as holding a pound, about as solid as you can get, and a $52 billion market cap. So that means there's $52 billion of these USDC coins right now in circulation. So that's what I got for you this week. Again, Thursday evening stream will be back as normal. I wanted to try to separate, some of the crypto. Not everybody is into the crypto. Not everybody's into the stock trading. Some people just wanted straight up peer-to-peer landing information. And then maybe the streams, they get a little bit shorter. Oh God, did I go an hour? I'm always trying to get it under an hour. But I seem to really have such a hard time doing it. Let's see, you got any comments, put them in the chat. I will do my best to answer it. Investors spend money on crypto wallets and then give it away to companies to stake. No, well, a crypto wallet is, the one I was showing you is a browser-based wallet. You're talking about a Ledger, which is a hardware-based wallet. You can actually stake through to, if you have a Ledger wallet or a Trezor wallet, which is a hardware wallet, you can stake through that too. Not all of the platforms have the ability to do that, but there are several platforms where you can stake directly through your hardware wallet. You still control it, that's what I mean. You're not giving away your coins, you're just pledging them through a smart contract and then getting returns. So I think it's always good to have things on a hardware wallet too, because you have control over them. You just don't lose the passwords. You need to keep those in a safe place. Mark, hi Mark B, glad you're enjoying the stream. Yes, regarding staking, if the companies are all safe, they can't take your crypto. Why do you use so many companies to do it? Just because the reason why is because the APRs, interest rates change. So sometimes the validators offer, let's see, let me show you this. Sometimes the APRs are different, like you see right here, 6.7% to 6.3%. But one of the main reasons why they do it and why people do it, myself included, is for decentralization. Solana is maintained through a voting system. You can see right here, for instance, if you look, let me show you. See if you can see this. Under identity, it says vote account blade. It's the second long string. And the idea of Solana is to try to keep it decentralized. So to spread it across these validators, these 400 validators, helps to keep it decentralized. That way one person holding too many coins can't control how the system works. That's what Marinade is really good for. It helps to keep the network decentralized because it's putting it across 467 validators. So imagine if 6.68 million Solana here went to a single person. Say it went to the Shinobi, this person would then have over 10 million Solana. So they would have more voting rights than the rest of these validators, which is, they try to keep it balanced. That's the whole reason why we use these validators. I hope that makes sense. Sometimes I don't always explain things well. How do the stakes make money to pay these rates? Yeah, that's a great question, Paul. The way that these validators make money is these guys are processing the Solana transactions. So Solana is a coin that is used in the DeFi world, also for NFT transactions. And these companies here, or these people, are using they're called nodes that they have running on their computer machines, and they're processing these Solana transactions, and these validators are paid a fee to do so. No different than the people that are running Ethereum mining nodes on their computer, who are getting a little piece of Ethereum every time they run a transaction for the network. So this is how these guys are able to pay out these interest returns. You can go to the Solana too. If you go to solana.com, it tells you here about running validator nodes. What is a validator? Validators form the backbone of Solana's network by processing transactions and participating in consensus. Each validator helps make Solana the most high-performance blockchain in the world, and anyone can run a validator node, but you have to have a certain amount of coins owned to be able to run that. And then again, they get percentages of fees for doing so. I think Cogent's website too has a good, let me pull it up, maybe there we go. This is a good article here if you want to read more about how these companies make money. Media, if you search Cogent Crypto, how to become a validator, it shows you here revenue. There are 3 sources of revenue for a validator. They have a predefined inflation schedule. Right now the inflation rate is 7.2%. This pool of the 7.2% is distributed among the staked SOL across all validators. The validator can collect a percentage of the inflation gains. There's also transaction fees. The validator is the leader. They collect 50% of the transaction fees generated by the network, so they make money that way. And then also storage rent fees. Storage rent is given to leaders, so validators, and then they receive money for doing that. So see how much you need to stake. Oh, here you go. The base stake amount is 25,000 Solana. So it's a pretty big amount that you need to stake in order to receive a validating node. Yeah, so it's an expensive thing, and this is how these people make money. So I hope that makes sense. Evening, Patty. Nice to see you. Lots of new information. Can you write down this on your website so I can work through it slowly and take notes? Yes, what I'll do is I'll put in the link to this video. I'll put in the links to the things that we've been looking at today. IX Owens, where can you stake USDC for the returns you mentioned? Okay, so here's the thing about USDC. You have to, well, first of all, it depends where you live. So if you're in the US, you can stake at places like Celsius is one of the big ones. You can stake on BlockFi, Crypto.com. Most of the big platforms that are centralized platforms do offer USDC staking. If you are not, and if you're in the UK, I think, see Binance. Let's see if Binance staking. Let's see what Binance offers. So Binance.com, if you're in the UK, you can actually stake all these different coins, depending on what you want to stake. Let's see if they have USDC. They have VeChain. I don't know if they have USDC. Oh, Polkadot, 11 point. You can get 11.51% on Polkadot. You can stake Luna, Cardano here, You just have to own it in your account too, by the way. You don't have to do anything other than own it. Come on. I wonder if you can sort by. Let me search. It's kind of annoying that they don't. I have to keep scrolling down. I think it's in here somewhere. I just can't see it. But Binance is probably your best starting point. Let's see. Let me Google it real quick, see what other companies offer. Staking in the UK. I'll tell you what, I'm going to do a little bit more research because this changes quite often too, and I'm going to put it in the description on the YouTube video. When we're done with the video, I'll pop it down, show you where you can stake things like USDC. Because I think it's one of the coins that are really worth looking into staking. I'm not sure if you have access to Celsius in the UK at the moment. I think they used to, and they are working on reintroducing it, but at the moment it's has been removed. Why doesn't staking pay in the same currency? Why MSols instead of Solana? So Marinade Finance does it that way. They're the only ones that do. If you stake directly through your wallet to one of the validators, you get paid in Solana. The reason why Marinade gives you MSols is because they want you to be able to use those MSols. It's kind of like your Solana is the collateral, and you get MSols in return. Then you can restake it to get more of an APR, or you can take it and do more of a risky DeFi staking. But the other validators pay out in Solana, so they don't pay out in MSols. That's why people like Marinade, because you're using like a collateral of your Solana, and you're getting something back that's liquid that you can use to do something else with. Normally when you stake, you don't get it, you don't have that ability unless you take out a loan with your crypto as a collateral. Why does Coinbase not have massive selection staking versus the main crypto platforms? It's very user friendly. Some of the other crypto platforms do lending. So they usually, when you're lending your crypto and staking it to a company like Binance, they're actually taking your crypto and then lending it out to traders and people that need money. So Coinbase doesn't do that. The only things that they offer, I think, are Ethereum 2.0 staking and a couple of other things, but Coinbase is generally not a borrowing platform, so that's why they don't offer staking. Yeah, so anyway, I think we're going to wrap that up. I hope that was helpful to you. Again, we're going to do more staking in the future. It very much is dependent on where you live in the world to what you can do, unfortunately. Like if you are based in the US, you don't have access to Binance.com. You have access to Binance.us, and they don't offer a lot of staking in the US, but they do in the rest of the world. If you're located in the UK, you don't have access to Celsius. You don't have access to Crypto.com and some of the other companies that offer staking. You can also check out FTX. I think maybe FTX. Let's see if FTX has access to staking. See, you want to check that because I'm in the US right now. It's defaulting to the US's website. Here we go, FTX International. Let's see what kind of staking they have. FTX is a pretty big trading platform too. See here, $11 billion of volume, 24 hours. It's a lot of money that's being traded. Let's see if they offer it. I don't know the FTX. I'm pretty sure FTX does offer staking, which is you can open an FTX account if you're in the UK. Okay, so you can do FTT staking, which is FTX's native coins, which you can get. What is this? No, this is a referral. I don't know what that means. Let's see here, FTX. So according to this article, you can stake Solana on FTX. Actually, I've heard that before. You can pretty much, you could buy the Solana on FTX and then stake it on there. The only thing is, just remember, if you stake on one of these platforms, again, they're lending your crypto out, so you do not have control over it in certain ways. You can also, you can cancel the staking at any time, though I don't think it's locked in for any amount of time. FTX staking is over, this says. So I probably should write an article about this and write. The problem with writing an article about it, it changes so often. So 1 minute the regulators are coming in and changing things, and the next minute, you know, everybody's staking is okay. For instance, BlockFi is a company in the US that is big on staking. See here, these are all the coins right now. If you do live in the US, which I know a lot of you don't, but you can get 8.75% on USDC. They are currently working with the SEC to become authorized by them to stake legitimately, which I'm not saying it's not illegitimate, it's just not regulated. So this will likely change. A lot of these things will change. So this is the problem about writing articles about it, that things change so often. So I tend to just do it on the YouTube because it's live. Anyway, we'll see you on Thursday. Thanks again for tuning in. I hope you enjoyed it. Have a great week, and we'll see you next time. Thank you so much for being here. Don't forget to subscribe, hit the thumbs up, and see you Thursday evening, okay? Take care. Bye.